Hey everyone. So I thought I'd do a quick video. Just seeing a lot of interesting stuff out there, and um, put out a short oil market sort of status update for everyone. Public email. Um, just showing some of what's happening to the oil market in some of the largest measurable consensus data. And so oil inventories are declining very, very rapidly here in the US. And this is pretty much unprecedented. And the last time we saw anything like this, we saw oil prices soar higher. And when you look at what's happened with oil and products and the Strategic Petroleum Reserve, we are um, collapsing from an oil perspective. And I've tried real hard to not be like too doomy. I feel like there's a number of these oil analysts who were very bearish last year. Almost everyone, I was told that XYZ sort of famous oil analyst was super bullish the whole time, and found a podcast, which I had seen in 2025, where he was super bearish oil and telling everyone to sort of sell and watch out for a recession in 2025. And that was actually a time where I put out an article talking about how I was essentially doubling and tripling down in into oil stocks. And so, not a like I was right, he was wrong sort of thing, but just like sort of confirmation that there was just, just absolute sort of washout of all of this stuff. And that a lot of the folks who are sort of chiming in here in both directions were super wrong, sort of repeatedly throughout the last year or so. So I think that's worth sort of noting. And so, why does that matter? Because there is data that exists and matters a lot. And so, and also, this is not about being pro-war. So more dogs. This is about being pro-money. And so I'm not in favor of war, but I am in favor of the freedom of the Iranian people, and hopefully they end up with a not totalitarian theocratic government. Um, but ultimately, that's not what this is about. This is about finding really interesting stock ideas and sharing them, and then finding really interesting macro environments with really nice tailwinds for those ideas. And I think I found some great ones so far. So good. The stock ideas that I've shared have mostly outperformed a lot. It actually, I put in here that two ideas were below the pre-publication price. Actually, that was an error. Only one is below the pre-publication price. Idea number 13 is actually up a little bit. That was a old number and incorrect. So my bad. Okay, can you not hear me? Just testing. Someone mentioned that they couldn't hear me. Testing. It's possible that there's a connection issue. There's thunderstorms right now in here in Houston, and there's a possibility that I see that it's not okay, great. Okay. Um it's possible that the connection got lost for a second. Even with fiber optic cable connection, it still appears that even though it shouldn't be this way, internet connections here in Houston can be driven by the weather, which is sad. And then one other note: so I've been tracking performance of these ideas a couple different ways. One is just the pure performance of the idea from the unaffected price, so the day before closing price of the stock or related security prior to publication, up till the close price of whenever it is that it's measured, as indicated in that sort of uh, footnote at the bottom. And then one of them is that, like I said, the above chart, and then there's this chart which I've been showing, which is um, I've been calling it portfolio, but it's a composite. It's not, this isn't meant for people to copy exactly or anything like that. It's just taking these ideas and taking the large ones and attributing a 12% initial weighting towards them, and the medium sized one and attributing a 7% initial weight towards them, and small ones and attributing a 2% weight. And while that may sound strange, I promise you it's not cherry picked. And the way, and also you can tell that this is real data. There's movements in both directions, and some of them are pretty precipitous in both directions. This is not, if this were a portfolio, which it's not, the Sharpe ratio, I'm not sure would be amazing, even though the material, there's been enormous outperformance versus energy stocks and the broader market because of the high level of idiosyncratic performance of the individual ideas, which is what I'm selecting for. I look for high volatility as measured by upside potential, and I take some downside potential risk in exchange for high upside potential. That's just sort of my investment style, and so what I set out to share through Bison Insights. And again, real boats rock. I try really hard to find ideas that will outperform, and occasionally I will be wrong. And I've closed out one of these ideas, idea number 10, when it did really well. And frankly, I closed it out and then it almost doubled again, and then now has fallen to below the price where I closed it out. So, I am imperfect. And frankly, idea number 10, idea number 2, and a couple of these other really high performing ones were actually small ideas, along with a couple of underperformers. And then the sort of solid doubles or so, those were medium to large ideas. And so, again, not cherry picked. Coulda, if I wanted to, reconstructed this to be dishonest in a way that would show a composite that would be up way, way, way more. And that's just not who I am. And that's not what I'm interested in doing. What I'm interested in doing is finding ideas like this that I own, buying them, owning them, holding them for a while, as I'm still holding 14 out of these 15 ideas that I've shared, and sharing my investment thesis, the key elements of them, here on Bison Insights, and then sharing updates on them where relevant. So I want to show a little bit about this latest update that I put out. So that was just on the oil market, and it's sort of amazing how bearish people have gotten. And then, and again, I just think that it's worth highlighting a little that my perspective is a variant view. And this isn't meant as a like throwing stones at anyone in particular, but there are very expensive research services that purport to be sort of the leading experts or the leading whatevers in XYZ things. And then there's pundits who, in many cases, don't invest their own money in these things and don't have sort of very easily accessible track records. And many of the folks who were bearish in 2025 are now very vocally bullish, or at least they were very vocally bullish over the last couple of months. And many of those who were very vocally bullish a couple of months ago are now bearish again. Some are not. And I just wanted to highlight that that's not me, and that I have a particular view, which is that I think oil prices will rise potentially from here, but certainly from where they were in 2025, and that they will stay high for some time due to the longer term macro trends and cyclicality of the space, as my firm wrote about in April of 2025. This is not an offer, solicitation, or recommendation for that firm. It's only open to investment from accredited and qualified investors. So that's not the point of this, but the point is to highlight that there are variant views, and some of them are correct. And so, and I bet on my views heavily with personal money. I'm personally the largest investor in my investment firm, and in the funds that my investment firm advises. And I made those bets based on long-term growing demand, cyclical underinvestment in oil, which I think will eventually lead to all-time high prices, and that will lead to oversupply, and I will be out hopefully at that point. That's sort of my plan. And then also this observation, which was really important, which was that when prices collapse and when even folks who were very vocally bullish get very vocally bearish, like I showed. Oh shoot, I'm not showing the right. I meant to show a different screen. It's funny. I was walking through this other thing. So here's the long-term bullish trend for demand for oil, which again is not what you'll see for most people. But also there was this work that I had done on the historical performance of oil stocks after oil crashes. And so, was I a little early in April of 2025? Potentially. I don't know. I mean, this was actually after prices had fallen to the bottom and were starting to recover a little. There was a risk that prices were going to fall more. And that was a big pushback that I got. And again, I put most of my remaining liquidity into funds at Bison at my investment firm, locked up. So it's not like they were it was there weren't my personal liquidity. I was actually part of why I launched Bison Insights, was a nice sort of cash generation to make up for investing essentially all of my remaining liquidity into oil stocks, because I had this strong view based on this analysis as well as the fundamentals. So the long-term underinvestment, and then I got crazy pushback on this. And I showed people, hey, this is what happened if you put money in January of 2020. Frankly, I sent out a bunch of letters to CIOs of endowments and foundations and pensions in 2020 saying you need to invest more in oil and gas stocks. You are underexposed to statistically underexposed by a lot. There's huge upside. And I got some snarky pushback as oil prices fell more over the following few months, and it did not matter. It turned out that if you bought oil stocks in February of 2020, before oil prices fell because of COVID, people were not really thinking about COVID. It sort of didn't matter. And you lived through the biggest oil price down movement in history, and oil prices went negative. If you bought those stocks in 2020 and you held them to 2023, you outperformed everything. It didn't matter. You could buy them in February 2020. That's what this chart shows. And if you held them through, I think it was like mid 23, so it was like 2.5 years or less, you got like a 200% return. It was crazy. And so this was very similar, where I was like, look, like, is this the perfect time? I don't know. There's certainly blood in the streets, makes it super compelling to me. And frankly, the place where I put the most money was into this one co-investment, into this one particular oil stock that is up actually more than this shows by quite a bit since then. So it worked out really, really well. Pretty happy with that. And I do want to highlight, this is a variant view. This is not what you'll see from most of the folks um, that are out there sort of sharing their punditry or whatever. And this is not theoretical. This is real. This is my money and my story and my life. And so my thought is to, through Bison Insights, show people what this looks like after, right? So put all this money in, start sharing stock ideas, start sharing the performance of those ideas, share the key elements of the investment thesis. Am I publishing 100-page reports? Definitely not, right? Like, frankly, I think 95 pages of 100-page reports are sort of like nonsense. And frankly, in too many cases, if there's a 100-page report, all 100 pages are nonsense, partly due to the effort and the setting out to do the 100-page report almost means that you're going to end up with the garbage. Frankly, similar to some of these pundits who were very bullish oil and then got very bearish last year, and then now we're very bullish again. It's like sort of there's something wrong there. And my take on sort of these reports is to come out with stuff that's very abbreviated, that is and very focused, and to try to share in these reports what actually matters. And so here, let me share what I put out this morning, this update on an undervalued producer. And actually, I sort of highlighted that in this, where I highlighted a YouTube video that came out from someone that just puts out stuff on a lot of different oil and gas stocks and other stocks in the public domain. And one, they put out this report on this stock, the idea that I shared, that's already up 40%. So the more stock goes up, not always, but by and large, the more stock goes up, especially in the short term, the more risk there is from the point that it's already up versus where it was before, and the lower return there is from where it's up versus where it was before. Lower return potential. Not always, but just sort of generally speaking, if you go and you buy this shirt for $50 instead of buying it for $40, you got like a 20% worse deal. It's just the nature of the thing. It does it a 25% worse deal. It doesn't mean that it's a bad shirt. It just means that, if it ends up being worth $100, your return is worse. And if it ends up being worth $10, your loss is worse. And so, in both cases, generally it's better to be earlier, but not always. But then, this particular company, it's pretty remarkable. They're buying back stock and paying off debt, and they're just so cheap on cash flow and on reserves, and they're really delivering. And so I thought it was fun, actually, to share this particular one where I highlighted sort of the key elements of my own thesis, which is behind the paywall. I'm not gonna show it for this particular video, the rest of it. But it is interesting. I found someone again. He showed a higher valuation estimate for this company than my estimate at, let's say, $80 oil. And I'm not giving a price target. It's just sort of, hey, like where do I think if this was at fair value, where would it be here? And again, up 150%. I don't know, something like that from where it's at, which is fantastic. It's huge upside in this particular idea. I think it might be my largest investment if it's not, a top two investment for me, sort of personally. And so, huge investment for me, huge upside. Found this guy who actually thinks it's worth more for reasons that I think are fine, but they're not. I think it sort of misses the key elements of this, which is that it is ultra cheap and it has ultra high upside. And I think it's one of those weird things where people are so negative on it, it's a low multiple, but they're actually delivering better than many, if not most companies that are similar to it that trade at a high multiple. And there's this extra advantage, which is the more stock you repurchase at a low multiple, you buying one share at like 2 times cash flow is the equivalent of buying 3 shares, both as an outside investor, but also for the company buying back stock, buying 3 shares at like a 6 times multiple. And then for repurchases, it's very important that you buy back stock at a large discount to net asset value. If you buy back stock, but you're buying back at a premium to net asset value, you're actually destroying value on a debt adjusted per share basis. And so there are these companies in the oil sector who are buying back stocks who, subject to the forward curve being correct, which it may not be, but just, using that as an analytical point, who may actually be destroying value through their share repurchases. They're plotted. But there are folks I think that are destroying value through repurchases, whereas these guys are buying back stock, and every dollar they're putting in to buy back shares increases value by $2 or $3. It's pretty amazing. And there's a sort of compounding effect through that. Very exciting, I think, to see this sort of activity, to get to own this sort of thing. Generally, I don't talk about companies that are doing share repurchases, but this one is sort of like getting more attention. And my goal with this is not to make the share price increase. It's not to convince anyone to buy the stock. Buy it, sell it, whatever. Not my problem. I'm not your financial advisor. The goal of this, frankly, is not really about anyone listening buying or selling anything. It's about highlighting my investment process and helping educate folks in sort of how I navigate with, close to 2 decades of experience, for better or mostly for worse, in professionally investing in oil and gas companies, how I navigate this process and showing it essentially in real time through sharing a whole set of investment ideas that I have real money, a meaningful portion of my net worth invested into, and then allowing people to sort of see the feedback and the pushback and the negativity and the concerns and the macro concerns on a daily and week and month sort of basis. And the idea being, hey, you know, I named my investment firm Bison. My co-founder named it that because bison's the only animal that when there's a storm, it faces into the storm and it gets through it safer and faster. And so named the newsletter, of course, Bison Insights too, because why not, right? And so it is just so amazing seeing the concern of the day, the concern of the week on oil stocks, etc. And then to share one, my perspective from a macro perspective. It's not propaganda. It's not bullish or bearish or whatever bias. It's just my view on the thing. And hopefully helping through sharing that particular view, which again, I'm biased in the sense that it's in line with where I put my money, but I put my money where my view is. And I move my money when my view changes, as evidenced through the idea that I closed, where I thought the risk reward was no longer that compelling. And frankly, where I've moved back and forth from oil names to gas names to oil names, where, when I launched Bison Insights, I actually thought there were great opportunities on the natural gas side, which was true. And then I pivoted pretty hard towards oil. Here, let me pull this up. I think I've shown this on prior videos, but it's one of my favorite articles that I did for Bison Insights. I'm really proud of it. Used some of the work from some friends, and it's always fun to highlight their stuff too. They had a really really good chart in here. Let's see. Share this. So, this is December 2025, and basically this was hey, gas stocks were nice, oil stocks are where it's at. Here, this was some of these ideas now, like idea number 3 is up some. I think it's idea number 4 that's doubled, and idea number 5 I think is doubled, and I think idea number 6 is up a ton, and I don't have to go back through and look at sorry, I don't need to make that up. Let's see. What was it's just sort of fun to walk through this. After, let's see, should have this in front of me. I don't. Sorry, give me 1 second. I just want to not inaccurately share the specifics on these ideas, and then I'll get into this. Okay, yeah. So it's just super fun. The idea number 3 is up only 24%. Idea number 4 is up 91%. Idea number 5 is up 102%. Idea number 6 is up 84%. So, I think I was getting some pushback at the time. Hey, what are you doing? Some of these things, idea number 7 was minus 7%, and idea number 7 is up 64%. So, there's been some validation. And frankly, a lot of that performance was actually before the Iran war. So this is not like a Iran war trade or anything like that. This is a oil price cycle trade. And we have now moved from, number 4, from quadrant 4, low prices, to quadrant 1, rising prices in this oil price cycle. And, very exciting. There's a good spot to own E&Ps. It's a good spot to own services companies. And I was pounding the table that we were moving from this low price environment to a rising price environment, which we're now in. Arguably, hey, like, have prices risen in the last 2 months? No, they're down a little in the last 2 months, but oil's up almost 100% since this thing came out. And the forward curve is up a lot since then. And again, as I wrote here, the reason is structural. Production declines, you need to reinvest. If you don't have high enough prices, you don't reinvest. I showed one of my favorite charts, which is this historical frequency of price for oil on an inflation adjusted basis. People got so mad when I first put this out in, I think, 2023, 2024, something like that. This was based on a price study done by, I think it was Morgan Stanley, based on Bloomberg and Platts data. And basically, the way I see it, there's mostly supply destruction pricing for oil and sometimes demand destruction pricing in the last 15 years, because we've mostly been in a bear market for oil in the last 15 years. In a bull market, I think you'll see mostly demand destruction pricing for most of let's say, a 15-year period, and then less, but sort of clustering in a supply destruction period. We were in a supply destruction pricing period. Frankly, right now, we are weirdly still in a supply destruction pricing period. We're seeing rigs rise, but not as much as you would think, and way below activity levels from like 15 years ago. And that's because oil prices are not nearly high enough. And again, this gets back to, who are you listening to on oil macro? What are they actually betting on? And what's their track record? And in the end, the reality is that most of the people that get this don't really talk about it. They're just betting heavily on it. And the people who get it most, from what I can tell, are billionaires, and they're just on their islands sort of betting on this. So the history of this stuff is very promising, which is, you saw this giant gold move, and then you saw copper move, and then you saw oil move. And if you remember, gold went from like 1,500 an ounce to 5,000 an ounce over the prior 2 years. And this was actually into the peak for gold here. And people were so mad. They said, oil, this does not happen. This is nonsense. And there were, I shared this a lot, got so much pushback. And lo and behold, oil doubled, or something, like, actually more than doubled, within 3 months of publishing this over and over again. And so, it's not, this is less of a I was right, and more that process drives outcome. And the process here is having open eyes and an open mind, and, an openness to being contrarian. And the reality is that, similar to this time in December, it is not quite as extreme to be, um, bullish oil, but it's actually pretty close, sort of weirdly. And you would think that it wouldn't be. You would think it would be pretty consensus to be bullish oil, but it is not. And then here I'm going to look up this. This is this Goldman chart on positioning. I'm going to share this. Um, Most institutions are bearish or very bearish oil, slightly bearish or very bearish oil, and there are very, very, very few folks who are bullish oil, almost as few as in the depths of the downturn in 2025, and almost as few as in late 2020, which was, again, one of the best times. Maybe in late 2020 it might have been the best time to buy oil and gas equities in my life. And then this is, or at least in my career, and then this is probably the next best time to do that. So, yeah, or sorry, 2025, early 25 was maybe the next best time, and this may be the third best time, and we'll see. So it's very, I think, it's a very good environment, I think, for these stocks. And then I have this fantastic Drill Baby Drill hat, which if you want to go to the Bison Insights merch store, you're welcome to come check it out. It's on there. Here, I'll share the link for it. Um, we donate the net proceeds. I think I make $2 a hat, and I've been donating that to the Houston Zoo. I need to set up a little like fund there to try to get them to bring back. They used to have a bison exhibit, and they haven't had one for a long time. So I think it's a nice little, not it's not the same as like, feeding widows and orphans, but the reality is that there's, plenty of both government and non-government programs for that. And the educational benefit, I think, of having a public zoo is pretty positive. So I like that, and that's where I've been donating the net proceeds from these ridiculous hats and other fun Bison Insights merch. So wearing the hat, why am I doing that? What's going on? So the rig count is rising. And even with all the uncertainty and increased bearishness, there's a reality, which is that it is more economic to drill an oil well today than it was to drill an oil well a year ago. And we're actually just barely at the drilling rig count for oil today as we were a year ago. And so as the rig count increases, I think the drilling rig stocks and related services providers should do quite well. There's no guarantees. And again, this is not meant as financial advice. But I think there's a pretty good shot that these services stocks do quite well. And I am quite excited to own a lot of them. And I've shared some of my favorite ideas here on Bison Insights. And some of them are up a lot from where I shared them and up a lot from, let's say, my average cost basis. And some of them are not. And there's one in particular that I really like that I shared recently, and it hasn't moved yet. And maybe I'm wrong. I don't think I am. Their activity levels up and they generate gobs of free cash flow. And so, I mean, I just keep buying it. I told everyone I'm buying it, and I'm excited about it. And, it generates, um, it's close to a 20% free cash flow yield to the enterprise value today. And it might be close to a 30% if I include, that's just on the consensus numbers, if I include the step up in activity for them. And then the consensus numbers for them for next year is close to a 30% free cash flow yield, which is wild. And I don't like to value companies just on free cash flow because there's a risk. The companies cyclicals get very apparently cheap at the tops of cycles and very apparently expensive at the bottoms of cycles. This one, though, is closer to the bottom than the top, in my view, just based on actual activity. And I just think it's weird. I think people are so negative on drilling and on oil and, particularly oil field services, that they just are very hesitant to buy stocks like this, which is great. I'll buy more of it. They'll keep buying it. They'll keep buying it back. And, hopefully we'll see something similar to that chart I showed where, some of these initial stock ideas I share in Bison Insights, back in December, they didn't look so hot. And then, here we are 6 or 7 months later and, up 100%, up 70%, up 30%, whatever, like done very, very well. So hopefully that'll be the case with this one. There are no guarantees. Past performance may not be indicative. Investments do incur risk of loss. I am willing to risk it on this one. I am very excited about it. Um, there's a few of these stocks that update I just put out. Like there are some of them. One of my friends, he's a subscriber to this, and he was saying that he thought he could tell which of these stocks I'm really excited about. I don't think I hide it. I am really excited about that oil producer that I put out an update on this morning. I own a ton of it. I think people don't understand it. It's statistically cheap. It's growing. It behaves these days like a company that's at a high valuation, except it's at a low valuation. It has a lot of the characteristics of high valuation oil producers, high margins, high return on invested capital, really decent organic growth, a very compelling debt adjusted per share growth because there's so much free cash flow and is paying off so much debt and buying back so much stock while also putting up some decent growth numbers. So I really like that one. I really like there's one that has a bunch of infrastructure that's growing and hopefully going from cash flow negative to positive while also being in some really nice growth oil, one particular non-op growth oil prospect. And then these oilfield services names, particularly this latest one that I shared at close to a 30% free cash flow yield. I really like it. I don't think there should be a surprise there. I really like it. I wrote about it because I like it. I own it because I like it. I think it'll do well. I could be wrong. I've been wrong before. I will be wrong again at some point. I don't think I'm wrong on this one, but caveat emptor. Anyway, that's it for now. I hope you're all having a great weekend. And if you're not subscribed to Bison Insights, come check it out. And if you are, I appreciate you. Thanks for listening to this, and I hope to catch you on the next Bison Insights subscriber only space. Take care.